On a long enough timeline, the survival rate for everyone drops to zero. Hello everyone, this is Jeremy Levitt with the Happy Homebuyer number 21, and that's one of my favorite quotes from Fight Club, and it holds true even to the mortgage industry. In the end though, it's going to benefit you, and here's how. If you look at mortgages before all the financial reform that we saw post-2008, at that time you could literally get to the closing table without really knowing what your interest rate and terms were going to be. I look at that as the consumer's information really being at like 0%. The consumer knew so little about what they were getting all the way up to the point of closing. Thanks to technology, their information levels are getting raised up. So it's not like technology is changing the way that we do mortgages at such a fast pace that it's impacting us. It's really about how technology is bringing information to you, the consumer. It's allowing you to make decisions that weren't even an option before. How could you ensure that you were getting the best deal if you didn't even know what deal you were getting? And so as technology makes information easier for you to gather, we see things like the consumer direct internet call center type banks popping up. And they believe that they're going to take over the entire mortgage industry. They're doing it by offering low rates and low fees and making it available for you to see that that's what they offer. The real kickback though is when you offer the low rates and the low fees and you run one of those types of banks, a lot of times you're dealing with like a rookie loan originator. They're typically getting paid a lot less than a retail loan originator would. And so they have a reputation of having problem after problem after problem. That's why on the other end of the spectrum, you've got the traditional mortgage bankers that have been around forever. The high commission people that are just sales, sales, sales. So both of these people exist right now because there's people that will pay a higher interest rate and higher fees to make sure that they get treated correctly. And there's other people that will do everything to make sure they get the lowest rate and the lowest fees, including dealing with a headache or two. And over time, both of these companies could probably exist together for quite a long period of time. There's just one problem with that, me. See, you can shop me and see that my rates and fees are just as low, if not lower than those. And when you compare my customer service and my knowledge base to the traditional mortgage lenders, you'll see that I'm right there, if not higher as well. So why would anybody pay more for the exact same service, or even pay the same to have inferior service? I just don't think that they will. And on a long enough timeline, I'm betting that I'm correct. All right, now you've got the information. You know you can shop me. You know you can get that service with those rates. Why not?